I'm Kayla Baker, Manager of the Office of Consumer Services here at the South Carolina Department of Insurance, and I'm here today to talk to you about life insurance. Many of you already know that life insurance is an important tool that can help take care of your loved ones in the event that you pass away unexpectedly. It helps provide financial security and peace of mind, but many of us have questions regarding life insurance. So, I want to share with you 5 common questions we receive here at the department from consumers just like you. Question number 1. I have a whole life policy with Company A, and an agent from Company B says they can get me a term life insurance policy cheaper and wants me to cash in the whole life policy. Is this a wise move? The answer here is, it depends. Both whole life and term life insurance policies provide important coverage. However, there is a difference, and so before you switch, you should consider what they each entail and make the choice that is best for you. When considering a whole life insurance policy, you should know that it has 3 main characteristics. First, the premium. With whole life insurance policies, you pay the same premium your whole lifetime, meaning even if you bought it while you were young, you will pay the same premium as you age. Secondly, a whole life policy builds cash value. This means you can borrow money from the policy or use the cash value to pay for the premium if you need it. Thirdly, whole life policies typically are participating policies, which means that dividends are added to the policy. You can take the dividends as they are given. You can allow the dividends to build up within the policy, or you can purchase additional insurance with the dividends, which is known as additional paid-up insurance. Term life insurance policies are a little bit different from whole life policies and have their own set of characteristics. The 3 main points to remember for term life insurance policies are, first, is that they provide a specific amount of insurance for a specific period of time. However, many term life policies provide the option for the policy to be renewed at the end of the term, even if your health has changed. But keep in mind, the premiums are set by your age at the time of the renewal. So you will likely see a rise in your insurance premiums when the new term begins. Secondly, term policies allow a larger amount of insurance to be purchased for a smaller amount of premium. This is usually used for young families who have large bills and smaller children because the need for financial coverage in the event of loss would be greater than when the children are grown and the mortgage is not as high. And thirdly, term policies do not build up cash value. So once the policy term expires, the policy can also end, with the exception if you decide to renew it. Question number 2. I purchased a life insurance policy when I lived in another state. Does the policy have to conform to the laws of South Carolina now that I live here? No. The laws and regulations of your former state would still apply to your policy. Our state laws apply to policies written in South Carolina by state licensed agents and insurance companies. Question number 3. My spouse purchased a policy 1 year ago and recently passed away. The insurance company has not paid the claim and now wants medical information. We have paid on this policy for a year. Shouldn't they be required to pay the claim? Well, it depends. Most life insurance companies complete a review if the death of the insured occurs within the first 2 years of the policy's effective date. That's because life insurance companies have what's called a contestability period that allows the company to review your coverage for anything you misrepresented within the first 2 years after the policy's date of issue. If the company can prove a material misrepresentation that was made on the application and that would have affected their decision to issue the policy, the company may refuse to pay the claims. However, they must return the premiums that were paid. Question number 4. My parents have paid on a life insurance policy for 15 years. Now the company has stated they must double the premium they are paying to keep the policy. How is that possible? Well, situations like these usually mean the policy is a flexible premium or a universal life policy. This type of policy allows for a low minimum premium payment as long as the company investment does well and the cost of insurance remains constant. Then the premiums being paid may be sufficient, but if interest rates decrease or the investment does not do well, the policy may start using portions of the account value to help cover the cost of insurance. If this continues over a period of time, the account value could be nearly depleted. This may result in the company asking for a premium increase to keep the policy active. Question number 5. I have an old policy taken out by my parents over 30 years ago, but I cannot locate the insurance company. How can I find out where the policy is now? You can visit the web address on your screen to access the insurance policy locator created just for this issue. If you know the name of the company, you can contact us here at the SCDOI to find out if another company has purchased the policy or if the original company may have changed its name. If you found this video helpful, please leave a comment or share with others. You can also follow us on Facebook, Instagram, Twitter, and LinkedIn for more helpful information.